In today's video, I'll share with you what are the 4 best stocks that you can buy right now in March 2023. As always, to find what are the most undervalued stocks on the stock market at the moment, I've taken a look at what are their business models, so how are they able to generate their income and who are their different customers. And after, I've made a quick fundamental analysis on every single one of these businesses to see if they are in a good financial health. So let's get to it right now. Starting with the first pick on my list for the best stocks to buy in March 2023, which is Lululemon with the ticker LULU. This Canadian multinational is an athletic apparel company that is mainly focusing in the branch of yoga, running, sports, and all the other sweaty pursuits. This business currently has over 550 shops all around the world with a market capitalization of over $30 billion at the moment. Initially created in 1998, Lululemon was a yoga brand which was mainly worn by women and yoga enthusiasts. However, over the last couple of years, we've seen that they have been massively promoting their men's brand as well. In fact, it is one of the companies that has been massively using the social medias to build and boost their brand. Plus, by having a strong social media presence as well as some great online website platform, it is helping them a lot to reduce the initial cost of having, for example, different retail stores in many different places in the world. So they've been able to adapt to today and tomorrow's environment with the e-commerce platforms that are set to grow a lot over the next couple of years. Plus, on your side, by investing in that particular company, you are investing in a booming sector. Indeed, over the last couple of years, we've seen that yoga and the sport in general has seen a massive growth, where the sports and yoga itself is a lot encouraged by today's society to stay in good shape. And in fact, on the yoga field, we can see that this sector should see a massive growth as well over the next couple of years. But in fact, you might have noticed that the yoga pants are not necessarily used anymore only to go to the gym or make some sports. But nowadays, a lot of girls love to wear those pants that makes them really comfortable. And as being a leader in that field, Lululemon is in a great position to capture the future opportunities on that side. But now, let's see what the valuation measures are telling about this company. In terms of valuation, we can see that Lululemon currently worth about $40 billion, however with a quite high price to earning ratio of about 35. But what is really interesting is their incredibly high profit and operating margin over the last 12 months of about 15 and 21%. Plus, over the same period, they've been able to achieve some astonishing return on equity of about 41%. Add to this, over the last 12 months, we can see that their total revenue has been of about $7.5 billion, with some great growth of about 28% in their latest quarterly revenue compared to the same period but in 2021. Add with some incredibly great quarterly earnings growth of about 36%. However, we can see that this company doesn't have a lot of cash compared to what is its current debt. And to see what is the volatility, so how the value and the price of this company will fluctuate through time, we'll be using the beta on a 5 years period. And in that case, over the last 5 years, we can see that with a beta higher than 1, it means that this stock will fluctuate more than the average market. But over the last 52 weeks, we can see that they've lost only about 6% compared to the market that has lost about less than 10%. And in terms of their total revenue, we can see that they've been growing pretty well over the last 3 years, which has been reflected on their total earnings before interest and taxes progression. And it's pretty much the same picture for their operating cash flow that has been growing pretty well, which has obviously have a pretty great impact on their total free cash flow. Now for my second pick on my list, I've decided to include a company that might be the future of AI, and I've picked the company Workday with the ticker WDAY. This business is considered as a software as a service company, meaning that they are allowing their different customers to connect to their platform and use their different cloud-based applications. Great example of this technology are, for example, email, calendaring, and all the other office tools. Nowadays, many companies are using Workday products and services as some analytic tools, which notably help them for database decisions and financial tools, notably when it comes to staffing. For example, this can help the different different employers to make some great decision making and the employees to reach their full potential. So this company that is leveraging AI at the moment might be the future of the human resources. In any case, just like the other big techs, we've seen recently that Workday has lost a lot of value, notably because of the inflation pressure on the stock market. But in fact, for intelligent investors that have a long-term vision, this can be a great buying opportunity. Because despite that and their super low past revenue, we've seen that this company has had some incredible customer retention of about 95%, mixed with some incredible project revenue growth of about 20% for 2023 and 2024. It might be a wise thing for you to keep an eye on these kind of companies, especially when you see big AI companies such as ChatGPT that has gained a lot of popularity recently. And if you personally believe in the concept of AI, well, Workday might be another interesting option for you. But before, let's make a quick fundamental analysis on this company. At the moment, Workday currently worth about $48 billion, but unfortunately, we don't have the current trailing price to earning ratio. As I told you earlier, when you invest in Workday, you invest in a company that is yet to be profitable, but that has a great future ahead of it. So you're not investing in the present and in the past, but more in the future. So that's why we can see that the profit and the operating margin, as well as the return on equity, are all negative. Plus, over the last 12 months, we can see that the total revenue has been of about $6.22 billion, with some great progression of about 20% of growth in their latest quarterly revenue. But a great point about this AI company is that they currently have a lot more cash compared to what is their current debt position. Unfortunately, just like the price to earning ratio, we don't currently have the beta on a 5 years period to evaluate the volatility of this stock. But guessing by its 52-week change of less 25% compared to less 10% for the market, we can understand that this stock tends to be a more volatile stock compared to the overall market. But we can see that their total revenue has been growing pretty fast over the last 4 years. But unfortunately, since the cost of the revenue and the operating expense have also been increasing, it makes that this company still has some negative earnings before interest and taxes. However, for the same period, their operating cash flow have been able to progress pretty well, which has led to a great increase of their free cash flow between 2020 and 2022 and a slight decrease between 2022 and 2023. Now, for my third pick, I've went with the company Abbvie with the ticker ABBV. This biopharmaceutical company is specialized in the development of multiple different drugs in the field of immunology, oncology, and neuroscience. Plus, this company has a strong focus in developing and commercializing different treatments against chronic disease. I think it's not necessary to talk about the massive needs that we will need over the next couple of years for those kind of treatments. In fact, with the global aging of the population, we will obviously have more and more people that are getting sick, meaning that we'll have a lot of needs for those kind of treatments that might save a lot of future lives. And with over 30,000 employees all around the globe, Abbvie is trying to create solutions that goes beyond illness and help truly and have some positive impact on the client's life as well as the science itself. Plus, Abbvie has a strong dividend increase history that has been increasing of over 270% since 2013. And despite some poor performance of the overall market, Abbvie has been a company that has been able to perform quite well compared to it. So obviously this company is super interesting, especially in the sector in which it is operating in the biopharmaceutical sector. And as an investor, it is super interesting to invest in a company that not only has a lot of potential of growth, and to invest in a company that also finds solutions to tomorrow's problems and that has notably recently found a new solutions against leukemia. But now, what are the financial metrics are telling about this business? Now for Abbvie, we can see that it's currently worth a whopping $272 billion with a pretty fair price to earning ratio of about 23. But what is crazy about this company is their insanely high profit and operating margin, as well as some incredible return on equity of about 72% over the last 12 months. And in total, over that same period, they've been able to generate about $58 billion of revenue, which represent a slight growth of less than 2% for their quarterly revenue, and unfortunately a massive diminution of about less 40% for their latest quarterly earnings. earnings. And unfortunately, we can see that this company currently has 6 times more debt compared to its current cash position. But despite that, in terms of the volatility of the stock, we can see that it is way less volatile compared to the overall market, where it has been able to have some great 3% of return over the last 52 weeks compared to the overall market. And as I told you earlier, the great news for the dividend investors is their massive dividend yield of about 3.84%. That, however, have a quite high payout ratio of about 85%. For the total revenue of this company, we can see that over the last 4 years, they've been able to grow pretty well, which has led to an increase in their total earnings before interest and taxes. And over that same period, they've been also able to increase their operating cash flow, which has led to another increase in their free cash flow. And finally, for my fourth and last pick, I've chosen the company Alphabet with the ticker GOOGL. Obviously, mostly known as Google, this business is one of the world's largest tech companies with the world's largest search engine optimization that represents over 85% of the total market. Two other big different products such as Gmail, Google Drive, Calendar, Android, and obviously YouTube. Google has been building a strong brand to its name over the last couple of decades. Obviously, most of the revenue of this company comes from the advertising spendings, where the advertisers will put their different publicities on different websites such as YouTube, and Google will make its cut on the total budget of those advertisers. Plus, they are also making a certain percentage through the app sales and subscriptions, as well as their own sales of their different services and products such as the Google Pixel phone. However, despite having a super strong business model, we've seen that this company, just like the other big techs and Workday, has been totally crushed recently. And as I told you earlier, this was mainly due to the global economic conditions on the market, which obviously makes that their total revenue growth have been diminishing over the last year. So obviously the performance of Google has been affected by that, and it could also be affected in the next couple of months until the recession and the high inflation would be gone, and at that point this could come back to its normal level. But no worries for the investors, this could represent a massive buying opportunities to have and to purchase some discounted shares of a strong company. And despite being in a super competitive market with other competitors such as Apple and Microsoft, Google still has one massive strength that is used by many people all around the world, which is its search engine optimization. But obviously with the coming of AI in our lives, it's going to be interesting to see how Google will adapt to this future threat or future opportunities for them. But now let's make a quick fundamental analysis on Google stock. And finally, for the valuation measures of Google, which is one of the largest companies in the world, it's currently worth about $1.15 trillion with a super low price to earning of less than 20. And on their side, they've also been able to achieve some great profit and operating margin, as well as some great return on equity of close to 24% over the last 12 months. And with their tremendously high revenue of about $282 billion, they've had some growth of 1% in their latest quarterly revenue, but with some reduction of about less 34% in their latest quarterly earnings. But what makes Google one of the best stocks in my opinion is the number of cash that they currently have compared to their super small debt. But unfortunately, we can see that over the last 5 years, this stock has been more volatile compared to the overall market, where over the last year, it has lost about less 33% of its total value. And over the last 4 years, we can see that they have seen some massive growth in their total revenue, which has led to a massive explosion in their earnings before interest and taxes, except for between 2021 and 2022. And in terms of their operating cash flow, we can see that they've also been progressing pretty well over the last 4 years, which has been reflected in their free cash flow progression. Now that you find what are the best stocks that you can buy right now in March 2023, you might be wondering, hey Louis, but talking about AI, what are the best AI stocks that I can buy right now for the future? Well, to find the answer to that question, check out the video that's gonna be right over here, and I will see you soon. Peace.